Hi, Bill Bodner here, Mortgage Market Guide. Thanks for tuning into our weekly recap. So up on the screen, we have the big report for this week was gross domestic product. Came in for the fourth quarter, 2.6%. Now remember, this is the first reading, which is called the advanced. There will be two more readings to come over the next couple of months. So we will see revisions to this number, but that left year over year for the 2018 GDP at 2.9%, just beneath 3%. I think the big takeaway is that 2.6% was pretty darn strong. If you factor in that we had a stock market, very volatile, number one. We had the government shutdown. That was pretty bad. And number three, we had that split Congress, which clearly eroded some confidence. So with all of those events taking place in the fourth quarter to muster up a 2.6%, pretty darn good number. And now what has happened since then? Well, the stock market, when that rolled over back in October and November, there was a negative wealth effect, which absolutely dinged the GDP number. It hurt it for sure. That has since been reversed. I mean, the stock market is up significantly from Christmas Eve. And so that is going to be a tailwind for the economy. So it'll be interesting to see what happens in the numbers ahead. But, that was a pretty darn good print for the fourth quarter. Really bodes well going into this year. And so obviously the housing market, this is a nice number getting into the housing market. And, another component of that GDP number is 70% of GDP comes from consumer spending. So clearly the consumer is still alive and thriving. And so that's a really good thing. Looking to the week ahead, this is last month's jobs report. We have the jobs report next Friday. So this is a big one. We know the Fed is data dependent, right? Meaning that their monetary policy and their interest rate policy has to do with, the incoming data. It's clear that the Fed's going to sit on their hands a bit, probably not looking to hike rates unless the data gets really out of hand. Either it gets, massive job growth and or a real big uptick in inflation, which we're just not seeing. But boy, I tell you what, we had that 300,000 that in the January number. It'll be nice to see what happens in this February number. So you need to be dialed in on that one. And then the pregame to that is the ADP. Remember, ADP is private payrolls, and those come out on Wednesday morning at 8:15. If that number comes in hot or not, the bond market can really get banged up. So you need to be paying attention to those two reports. So, as we look at where we are right now, these are the highs of the year, right? And we're having a tough time. This was the jobs report last time. It was the high tick. This was the next jobs report. This was the high tick. The bond market sold off. And here we are again coming to another jobs report. So, the bond market has not performed well in response to the last few jobs report. You need to be real mindful going into next week, talking with your clients and your partners. Thanks for tuning in. Have yourself a great weekend, and we'll talk to you soon. Bye for now.